Hello everyone! Today, we will begin a journey that is not simply about finance, but about a symbol, a metal that does not shine as brightly as gold, but knows how to say things that no economist dares to say. Picture this: a world in chaos. Markets are in free fall. Inflation is like a hidden storm rising to the surface. In panic, people turn to gold, the metal considered the uncrowned king, the ultimate symbol of wealth. The last refuge when financial storms come. Gold prices are soaring. Financial news headlines are every minute. Experts are constantly appearing on television, analyzing and predicting. But gold is loud and familiar. It reacts exactly as people expect. A king in a cloak of power, riding the waves of collective fear. And what about silver? Silver does not need to speak loudly. It is a quiet presence, but every moment is a whisper, an untold story, a subtle signal of an approaching economic earthquake. Silver is more than a metal. It is a test, a mirror of the anxieties, hopes, and ambitions of the modern world. Silver was money long before the dollar. Silver was the lifeblood of commerce long before central banks. But what turned silver from king to shadow of gold? And why, when silver began to move, did seasoned investors fall silent and listen? Today, we will follow that journey, the journey of silver, a forgotten metal that never lost its power.
Did you know that every molecule of silver in your hand was once part of a supernova explosion, the spectacular deaths of stars tens of millions of years old? Silver is not born on Earth. It fell from the universe, the result of collisions between neutrons, extreme physical phenomena that only occur at the ends of space and time. When you hold a silver bar in your hand, you are touching the remains of dead stars, a part of the bones of the universe. But silver is not only special because of its cosmic rarity, it is also a physical treasure. Silver is the metal with the highest electrical and thermal conductivity of all elements. More than gold, more than copper. Imagine an electric spark running through a circuit, a signal from the brain to the heart, a laser in a technology factory. All of them could carry a small amount of silver as an unobstructed path for information to be transmitted. In addition to its electrical properties, silver is soft, malleable, and ductile, to the point that it can be drawn into a wire thinner than a hair. That is why the ancients used silver to make jewelry, food, and royal dishes. It is both luxurious, useful, and familiar. But silver also knows how to hide itself. When exposed to sulfur in the air, it tarnishes. From a sparkling metallic shine, it turns into a sad smoky color. Not because silver is weak, but because silver chooses to react gently to the world, like a quiet person who understands life. However, what really makes silver valuable is not its appearance or physical properties, but it lies in something that cannot be copied, its scarcity. According to geologists, in every million parts of the Earth's crust, only about 0.08 parts are silver, and most of the easily mined silver was mined clean by humans thousands of years ago. Now, to get to silver, people have to go deeper, to darker, more dangerous places, where only modern technology and tons of risk can reach. The total amount of silver discovered on Earth in the entire history of mankind is estimated to be more than 1.7 million tons. Today, it is estimated that there are still about 600,000 tons of silver that have not been mined. There is a question that is often asked: if humans can create artificial diamonds, can we smelt silver? In theory, yes. We can absolutely use nuclear reactions to turn other elements into silver, but the cost of doing that is so high that it is crazy. Just to create a few grams of silver, you need more energy than a small city uses in a day, so it is 100 times cheaper to mine silver from a mine in Peru. In other words, silver cannot be printed like money. It cannot be created by the imagination of governments or banks. It exists only when nature allows it, and people are brave enough to find it. The cold light of silver is a reminder that not all values can be created by command. Some things, like silver, like trust, like wisdom, must be found, discovered, and cherished. Silver in the history of money and financial systems. For thousands of years, silver has been more than just a precious metal. It has been money. If gold is the king of international transactions, of royal treasures, then silver is the king of everyday life, the lifeblood of markets, cities, and civilizations. From about 3000 BC, the Sumer people of the Mediterranean used silver and gold as a measure of value, with silver being more popular in everyday transactions. From then on, the reign of silver began. Silver coins became the standard means of exchange across civilizations from Asia to Europe. The most typical and also the most glorious is the piece of it of the Spanish Empire, minted from the huge amount of silver mined from the mountains of the New World. The coin became the first global currency in history, widely accepted from the ports of Europe, through the colonies of the Americas, to the bustling markets of China. In the East, silver bars and coins also played a vital role, forming the basis of trade on the Silk Road. In the 19th century, silver's power reached its peak. Many powerful empires operated on a silver standard, either a bimetallic standard, where the value of the national currency was pegged to a fixed amount of silver, or a fixed ratio of gold and silver. However, the late 19th century saw a coup in the monetary world, as the rise of the industrial powers, especially the British Empire and the newly established German Empire, began to tilt the balance of power towards gold. The decisive turning point in Germany's decision to abandon silver and switch to the gold standard began in 1871 after the establishment of the German Empire and its victory in the Franco-Prussian War. The huge war reparations that France paid to Germany in gold provided Berlin with the resources needed to establish a new monetary system based on gold. The German Currency Act of 1871 officially initiated this process. Germany's subsequent dumping of its huge silver reserves on world markets in the following years caused a supply shock, causing the price of silver to plummet. This event, combined with the passage of the U.S. Mint Act of 1873 by the U.S. Congress, which officially ended the free minting of silver, created a financial and political crisis that silver advocates called the Crime of 1873. From here, other great powers followed suit. Gold, with its compact value and stability, was seen as more suitable for an era of global trade and industry. Silver was quickly dethroned from a king and relegated to a secondary role. The sharp fall in the price of silver relative to gold caused crises and heated political debates, such as the Free Silver movement in the United States. Silver's abdication was complete in the 20th century. Starting with economic crises and two world wars, governments needed to be able to provide flexible money to finance military spending and recovery programs. Anchoring the value of money to a physical metal, such as silver or gold, became too rigid and unworkable. The decisive milestone that ended the entire reign of metal dominance was on August 15, 1971, when US President Richard Nixon made a televised speech announcing the complete end of the convertibility of the US dollar into gold. This decision, known as the Nixon shock, effectively ended the Bretton Woods system and ushered in the era of fiat money globally. Since then, no currency has been directly backed by gold or silver. Its value is determined by the faith in the issuing government and the rules of the free market. In the modern era, silver has moved away from its purely monetary role, but it has not disappeared from the financial system. It has found a new, more complex role. Some central banks, such as Russia, are said to still hold silver as a strategic asset. More importantly, the silver market remains an important risk indicator, similar to gold but often more volatile, and carrying more messages due to its dual nature. The benefits of holding silver, despite losing its monetary crown, silver still offers unique benefits to investors in the modern world, making it an indispensable part of many smart portfolios. First, it is highly liquid and has a small cap-friendly denomination. Compared to its gold sibling, silver is priced much lower per ounce or per tael, at times as low as 80th or 90th. This has broken down the capital barrier, allowing retail investors to easily access and accumulate over time. You don't have to be a millionaire to own physical silver. Silver is also very flexible and liquid across exchanges and jewelers around the world. But the most important advantage of silver lies in its dual nature, what analysts call dual demand. This is the most interesting and distinctive feature of silver compared to gold. About half of the world's demand for silver comes from the industrial sector. It is the lifeblood of high-tech industries, from the production of electronic devices, solar panels, electric vehicles, to medical applications. The other half comes from investment demand and jewelry making. This dual demand creates an incredibly strong and flexible price cushion. When the global economy is in recession, investors' demand for safe havens increases, supporting the price of silver. Conversely, when the economy begins to recover, demand from booming industries becomes a powerful force to push the price of silver up, even faster than the price of gold. Like gold, silver is also a solid shield against inflation and crisis. It is a tangible and scarce asset, which cannot be printed indefinitely like paper money. Therefore, during periods of high inflation, when the value of money is eroded day by day, or when geopolitical instability escalates, smart capital tends to flow into silver as a safe haven to preserve value and purchasing power. Finally, silver is a tool to diversify investment portfolios. Silver typically has a low or even negative correlation with traditional asset classes such as stocks and bonds. When the stock market is down, silver tends to rise. Adding a healthy portion to your portfolio will help reduce overall risk, like adding a shock absorber to your asset class to help it ride more smoothly through tumultuous economic cycles. Why hasn't silver exploded? First and foremost, it's the inescapable law of natural scarcity. While silver is rare, geologists estimate that gold is 15 to 20 times rarer than silver in the Earth's crust. The annual production rate of gold is also much lower. For every 9 to 11 ounces of silver mined, there is only 1 ounce of gold brought to the surface. The total amount of gold ever mined in human history is about 190,000 tons, enough to fit in an Olympic swimming pool, while the amount of silver is significantly larger. With a much lower natural supply, gold naturally has a much higher starting price. Second, it was a historical choice that shaped the fate of these two metals. In the struggle for monetary supremacy in the late 19th and early 20th centuries, gold won. The world's leading industrial powers chose gold, making it the sole monetary standard. Since then, gold has become the core reserve asset of every central bank in the world. Tens of thousands of tons of gold are stored in the underground vaults of countries, creating a huge, sustainable, institutional demand that silver cannot match. Silver has been dethroned as official currency. While still valued, it has lost its crown as the ultimate national reserve asset. Third, silver's dual nature is both a strength and a burden. Its role as an important industrial metal has created a solid price floor for silver, but it has also robbed it of its crown as a safe haven asset. Gold is virtually unconsumed for industrial use. Most of the gold mined remains in the form of bars, coins, or jewelry. It is a virtually permanent store of value. By contrast, a large portion of the silver mined is used in industry and never returns to the market as an investment. Furthermore, its dependence on industrial demand makes silver more sensitive to economic cycles, making it more volatile and somewhat riskier than gold for investors seeking absolute safety. Finally, there is the physical difference in wealth. Gold is twice as dense and heavier than silver. To store large amounts of wealth, you might only need a gold bar that fits in the palm of your hand, but you'll need a large, heavy silver box. For individuals, governments, and institutions that want to store huge amounts of wealth safely and discreetly, gold is clearly the superior choice in practical terms. In short, the price gap between gold and silver is not random. It is the result of natural scarcity, fateful choices in human history, and the different economic roles each metal plays. Who laughs when silver prices rise? Who cries? Silver prices have a complex and multi-dimensional relationship with the health of the economy. In the early stages of uncertainty, when fears of inflation and recession increase, investment demand for silver as a safe haven asset can be triggered, pushing prices up. However, if a recession does occur and is prolonged, it will have a strong and negative impact on industrial demand, which accounts for more than half of total silver demand. This could put a brake on silver's rise, even causing it to underperform gold. One of the most powerful tools for market analysis is the gold-silver ratio. This ratio shows how many ounces of silver it takes to buy 1 ounce of gold. This index is a silent dialogue between the two precious metals and is also an indicator of market fear and greed. When this ratio widens to an extreme, such as when it spiked above 93 during the COVID-19 period in March 2020, it means that gold is significantly more expensive than silver. This is a sign of extreme fear. Investors are dumping risk assets and rushing into gold, the ultimate safe haven, ignoring silver because of concerns that its industrial demand will decline in a recession. Conversely, when this ratio narrows, it shows that risk appetite is improving. Investors are more optimistic about the economic outlook, making silver, with its strong industrial demand, attractive and increasing faster than gold. In today's volatile world, geopolitical tensions and the trend of de-dollarization are also important drivers for silver. Wars, trade conflicts, and financial sanctions all promote the trend of central banks and investors diversifying their reserves, reducing their dependence on the US dollar. This increases the demand for precious metals, and silver, although not a primary target like gold, indirectly benefits from this flow. So what does all this mean for the economy? Generally speaking, a rapid and sustained rise in gold prices is often a worrying warning sign. It indicates that capital is pushing the brakes and withdrawing from manufacturing and business sectors to find a new haven. This can signal that credit is tightening. Businesses are having difficulty raising capital to expand, and the risk of economic growth slowing down is increasing. In other words, a precious metal price fever is both a symptom of a weakening economic body and a contributor to the disease. So the people who are smiling when silver prices rise are certainly investors who have been patiently hoarding silver. When silver prices climb, that is when they reap the rewards. They can either take profits to realize profits or continue to hold on in the hope that prices will rise even higher. Silver mining and smelting companies are also winners. Their profit margins improve as prices soar, while production costs remain relatively stable. The surplus cash flow will encourage them to increase investment in exploring new mines and expanding production businesses, creating a positive cycle for the industry. However, on the other side, many industries and sectors of the economy face difficulties as silver prices rise. Commercial banks may face a nightmare. When silver fever flares up, a large flow of savings may be withdrawn from the system to rush into precious metals. Banks have to raise deposit interest rates to retain capital, eroding their profit margins. The most painful may be manufacturing businesses that rely on silver as an input material. Electronics giants, solar panel manufacturers, and electric car makers will face rapidly rising production costs. They will face a difficult choice: raise prices, making their products less competitive, or accept razor-thin profit margin. The rising price of silver puts enormous pressure on the green energy revolution, so much so that many producers are having to research alternative materials, even though they are less efficient. On a macro level, when a huge amount of capital flows out of the production areas and into safe haven assets like silver, it will reduce the source of investment for growth, causing a slowdown for the entire economy. Businesses find it difficult to borrow money, investment decreases, employment decreases, and the purchasing power of society also weakens. Silver may be less flashy than gold, but its role as a bridge makes it an extremely sensitive and honest economic forecaster. It reflects in a real way the never-ending struggle between the state of human psychology, fear of an uncertain future, and hope for industrial growth. When uncertainty and fear prevail, silver rises as does gold, but gold often leads the way. On the contrary, when the economy is booming, silver will break out even stronger thanks to the strength of industrial demand. Looking to the future, the role of silver seems to become more important than ever. If you look at silver only as a commodity, you will miss the most magical thing about it. Silver, in this new era, is not just a metal. It is a message, a bridge between the past and the future, between the physical world and the world of faith. As humanity enters the age of renewable energy, electric vehicles, microelectronic chips, and the digital revolution, silver becomes indispensable. Without silver, there are no solar panels. Without silver, there is no smooth transmission in electronic devices. Without silver, green transition is just a nice slogan. And here's the paradox: a metal associated with ancient currencies. But that silver shine, if it shines too bright, if it rises too fast, can also burn out hope. When silver rises not because of industrial demand, but because of fear, because capital is fleeing the production system, that is no longer a positive signal. It is a warning bell for an economy that is running out of steam. So silver always has two sides. On the one hand, there is the light that reflects progress, where silver is the fuel for hope, for innovation, for a cleaner, smarter world. On the other hand, silver is also a channel to store value, a shelter in times of uncertainty, trusted by investors for centuries.